You might have put off investing for years because you assumed it meant supporting companies that don't share your values. Or maybe you want to diversify an existing portfolio and fund projects like clean water or green energy. On this channel, we've spoken about how you can design many areas of your life to be better in tune with your beliefs. Your money is one of the most powerful tools you can use to do that, but sustainable investing can help the world move in the right direction too. Before we run through 5 ways you can invest sustainably, none of what I say in this video should be considered as financial advice. In fact, sustainable investment by its very nature is less diversified and riskier than general investment. If keeping a clear conscience is more important to you than maximising your returns, then keep watching. The first and easiest option is to switch your pension to a sustainable fund. More and more companies are offering their employees pension schemes that upweight or entirely comprise ESG investments. That means you can save for your retirement by only investing in funds which meet certain environmental, social or governance criteria set by your company or the provider. Keep ESGs in mind because they're going to be important later on in the video. Definitions will vary from fund to fund, but essentially it means you're less likely to be investing in companies that have a bad record on human rights, environmental pollution, or undertake any unethical practices with their customers or employees. I've personally done this with my pension, but if your company doesn't offer it, there are many private pensions you could do this with, or you could speak to your HR rep and try to lobby for change. Most people's main long-term savings beyond their pension will be in a lifetime individual savings account known as a LISA. This allows you to save up to £4,000 per year until you're 50, upon which the government will add a 25% bonus to your savings up to the value of £1,000 per year. The good news is that here too, savings providers like Moneybox or Climate Invest are giving you the option to switch your LISA to a sustainable fund so that you can sleep soundly until you're actually old enough to use it. I recently opened a stocks and shares savings account with Climate Invest, who are incredibly transparent about their investments, as am I. I recently invested a very small amount in Climate Invest via a crowdfunding app called Crowdcube, which we'll get onto in a second. But there's an important difference to note here between the different kinds of ESGs. Some will simply screen out the bad actors and give you exposure to a much broader range of companies, whereas others will be entirely curated based on certain companies' non-financial benefits. It's really worth reading through the portfolio information to make sure you know what you're invested in and that it actually does meet your values. I mentioned Crowdcube, which is a crowdfunding app here in the UK, which allows you to invest in early stage companies even if you don't have a lot of startup capital. This is the riskiest form of investing that I'm going to talk to you about today. Not only are you essentially gambling on the fate of a very small company, but these shares are also illiquid, which means you can't sell them until the fund manager decides to. That's why I invest a very small amount in companies which I want to support. Some of those companies include Orbital Marine Power, who are building low carbon turbines which harness tidal power to create clean energy. The STEM, which is an ethically driven online garden centre, and Pawprint, an app which enables you to measure and reduce your carbon footprint over time. A more traditional way of building a sustainable portfolio is to use a retail investment platform like DeGiro or Hargreaves Lansdown. These will allow you to trade stocks and shares to your own liking. Picking individual shares, even in massive companies, is risky business because you're tying your fate to the fate of a company. But if you're really passionate about one particular company that you want to support, then holding its shares for the long term can be a good strategy as part of a differentiated portfolio. The safest bet here is to go and find ESG trackers or funds which expose you to those companies and therefore mitigate the risk while still giving you a chance to support them. Before I get into the last tip today, if you've been enjoying the video, then please go ahead and hit that like button. It really helps me with the YouTube algorithm, but also just to understand which videos you like the most. But okay, the last way you can invest sustainably is really for homeowners, because any repairs or renovations that you make to your property are going to impact its carbon footprint. You can improve the value of your home while making it better for the environment, whether that's by adding solar panels, improving insulation, or just getting a new boiler. That might be a lot less exciting than some of the options I've spoken through today, but honestly, if you've just cashed in your LISA to buy a new home, then maybe this is worth looking into before you go and invest in the stock market. If you're intrigued by Pawprint, then why don't you check out the review I made of their web app recently. I think you'll be really surprised at just how little change you can make to have a massive impact on your carbon footprint.